Hi, how's it going? How are you all doing? Welcome to another live show to a program that, if you didn't catch last week's stock market Q and AMP, let me tell you, it's going to become a regular on the schedule. It looks like you all have it set in your minds that every Sunday at 8, it's Sanhedrin. Well, so make sure to tune in every Thursday too, because we're going to have the stock market Q and AMP. Hey, this time with Albert Milan. Albert, how's it going? How are you?
Hey Antonio, how are you? Well, as you can see, I'm back in my usual spot. The vacation was great, but maybe I'm a bit weird, or maybe others feel the same. But for me, September is when the year really starts, Like a new school year, well, I don't want to call it school, but it's when you set new goals. There are still 3 days left, but I already feel like we're starting over. And well, the Sanhedrin Q and AMP, that hasn't stopped, but mentally, it's a reset.
Well, nothing has really stopped. I mean, look, 𝗙𝗘𝗟𝗡𝗅 here says, I want to know where Albert keeps his crystal ball. You see, Albert, for those who don't know us, just the other day, and this is funny, Albert, and I don't want to sound like an old timer, but one of our followers, who's also a student in our course, asked us, hey, what is the Sanhedrin? And I thought, wow, sometimes we just assume that everyone who joins the channel knows who we are and all that. Albert is the one who handles all the company analysis, the model portfolio, and so on, and he shepherds, if you'll let me use that word, the WS financial riskers, financial research, especially that Discord you all love so much and that's been so lively all summer. That's why I say no vacations, right?
Yeah, companies don't take a break. Plus, with earnings season in the middle of it all, even less so. But anyway, for those of us who are passionate about the stock market, which I think is everyone here on a Thursday afternoon, you probably share this with us, right? It doesn't get tiring, really.
All right, so hey, this is the fifth Q and AMP, a session. For those of you who don't know how this works, we're going to get started. Basically, we're just going to spend an hour with you, okay? And we're going to talk about current events and companies, but above all, you are the main participants. Ask us questions in the chat, and we'll answer as many as we can. If there are questions we don't get to because of time, just leave them in the YouTube comments, and we'll answer them there. And well, those of you who are research members, you already know you have Albert there to ask, both Albert and me, and all the Locos members to ask whatever you want. While those questions are coming in, which some already have, Albert, yesterday, Nvidia's results. And in the end, Nvidia isn't just another stock. It's a stock that makes up 10% of the NASDAQ, and it has a lot of implications. Have you had time to look at it? Even if just briefly.
Yes, and let me just say up front that obviously we're not the biggest experts when it comes to semiconductors and so on, which is an industry that really requires a huge amount of dedication to understand and keep up with, right? But NVIDIA has kind of become the poster child. That's an expression they use a lot in the English-speaking world, right? Like maybe the most iconic example of these last few years of the artificial intelligence revolution, right? And as you said, because of its weight in the indexes, and in the end, it's a company with a market cap of 4.4 trillion, right? Which is easy to say, but not that long ago, we were celebrating Apple hitting 2 trillion, right? As the biggest company in the world. I mean, everything is growing just like in the AI era exponentially. So beyond the results, which let me say up front have been excellent, right? Not only have they been excellent by any measure if you compare the numbers, right? In terms of growth and so on, but they've even surpassed some expectations, which isn't easy when you have so many people watching you closely, analyzing every detail and modeling everything, etc. Because like we were saying the other day in the Sanhedrin, Georgia Capital is a company we follow, but nobody else does, no analysts at all. But Nvidia, on the other hand, definitely isn't lacking in analysts and banks giving their recommendations and projections. So the results have been excellent. The thing is, that's not enough. When you're already the market leader, you're 10% of the NASDAQ, and everyone is watching you, it's not enough to just deliver extraordinary results. They always expect a little more from you. To keep surprising on the upside more and more and more, right? And it seems that in that sense, even though it hasn't been a huge disappointment, we see that today it's trading flat. At first, in the pre-market, it was down about 4%, a little less, but the CEO said they were planning to sell their most advanced chips, the Blackwell ones, to Nvidia. To China, sorry. And that in order to get approval from the US government to do so, they could or were open to sharing the revenue with them, right? So that's what made the market bounce back. And now it's trading more or less flat, right? It's not so much about the stock itself, which a lot of people don't even own, but rather that this could have dragged the market into more euphoria or into a black day, If this had been a disaster and it dropped by 10%, you can imagine that just from this effect, the NASDAQ would already open down by 1% because that's 10%. And then on top of that, whatever drags down with it, and considering the weight that AI, technology, hardware stocks, etc. have, you can see what this could mean. So we've come out of this pretty well, Antonio, wouldn't you say? For those of us who are a bit removed or neutral about this, honestly, it could have been a disaster. It's a bit absurd. We already know that these companies have so much weight and drag the rest down, but liquidity works the way it does.
Albert, in the end, there are a lot of people who follow us, members of research, etc., who ask you a lot about your investment style, right? You always mention that you follow a value investing style, that you look for value wherever it can be found. Right now, technology, things like the Magnificent Seven stocks and so on, aren't in your scope because you have better options. But how do you see it? Or is there any chance that one of them could make it in? How do you see the sector?
Look, if you remember in the last Q and AMP, a session a week ago, we were talking about a paradigm shift that's happening in tech companies, right? And the thing is, these are the best companies in history, and that's not for nothing. I mean, obviously, based on the merits they've earned, and these are businesses with a huge potential market, basically the whole world, right? Take Google, Microsoft, and so on. Their potential market is the entire world. It's global. They required very little capital intensity, very little capex, which was really interesting. And on top of that, they had extremely high margins. So that's an explosive combination in a good way, and that's how they've operated. Now, if that really starts to change, and we're seeing how NVIDIA's profits are actually coming from the capex of these companies, right? Let's not forget that what they sell are chips, which are, let's say, the foundations or building blocks of all these technologies. So if this really changes and these companies stop being asset light or capex light and start investing a lot more, the multiples at which they're trading, their valuation, and the pedestal the market has put them on will also change, because it's not the same to generate 100 million in operating cash flow, right? I mean, 100 million in operating cash and having to spend 20 is not the same as 100 million and having to spend 80, right? Because what you have left over for yourself is obviously the difference. So if this were to happen, what now trades at 40 times earnings could easily trade at 20, and nothing would really change. In other words, in the end, having your multiple contract because the market thinks your business model is no longer as attractive, the outlook has changed, the terminal value, etc., have changed, well, that's perfectly reasonable and has happened many times in the past. So what I don't like is exactly that. Even though I obviously recognize the quality of these businesses, I love these businesses. Meta at 90 was a gift, but at the valuations it's at now, and especially considering this possible paradigm shift we're seeing, right? Companies that went from being asset light to asset heavy, well then I'm not as interested anymore. I have nothing against technology, far from it, right? And they're the best companies in history, but the valuations they have now, for me, carry some risks that I don't want to take. At least it's not within my circle of competence to evaluate and take on this risk.
Eh. All right, so we've given our first opinion on NVIDIA's results. And hey, let's always take advantage of what's current. And we already have questions in the chat, Albert. I don't know if you want to start sharing your screen in the meantime. As you know, we're going to make this a bit interactive. You ask us questions, Albert checks out some numbers. I also have a page open to always look at some option strategies and spice things up. And I don't know where you want to start. Hey, shall we start? What do you think with the MX? Which, by the way, is one of those that hasn't stopped for vacation.
Yes, Antonio, perfect. Well, look, for anyone who doesn't know DMX, which I think is probably very few people here. In fact, obviously Gustavo's comment is pretty ironic, right? He thinks it's not very well known. It's actually an exploration company or mining exploration in Sweden, and it has a main deposit, but also other deposits, right? Like the Duntivo deposit, but especially the Viken deposit, which is famous, or rather interesting, because of its uranium, right? It has other products, and in fact, they consider uranium a secondary product compared to these others like vanadium, potassium, and so on. But in any case, the reason people follow it is because of the uranium. So in Sweden, there was a moratorium on uranium mining, and that was lifted yesterday. Well, it wasn't actually lifted yesterday because it still hasn't been voted on and approved, but it was already announced by the government, right? The Minister of Climate said that it was going to be lifted. So that's something that was already known, right? The government had already given a lot of hints and taken many steps, published things, etc., in that direction, and the stock has performed very well. It went from 3 months ago, it was at 25, 30 cents, and it reached 142 days ago, okay? So obviously, the market is already recognizing some of that. Theory tells us that this could be worth much more, obviously, right? Because when the ban is lifted, the resource could be revalued, mining could begin, and there could be a lot of people interested in this deposit. Now that nuclear seems to be experiencing a revival, a new spring, well, a lot of people might be interested in this deposit, which is one of the largest in the world. That's the positive side. What's the negative side? Well, it's a company that obviously doesn't have any revenue, right? It's very junior. So to survive, it has to dilute. Not long ago, it did a capital increase, also at 15 cents, so let's not forget that either. And also, there are still quite a few obstacles for this ban to actually be lifted. So the ban isn't the only issue, but then there are other doubts about whether the municipalities that are very much against it will actually be able to litigate, right? The communities where this operates, if this could bog things down for several years and so on. So yesterday there was the minister's press conference, and today the company itself held a press conference as well, explaining the catalysts and so on. In general, to me, the idea seemed very asymmetric because of the lifting of the ban, which we already knew about, but for what's left now, not so much. What I mean by this? Well, we had almost 90-something% certainty because the government had basically telegraphed it to us that they were going to lift this ban. And once it was lifted, obviously that deserves a re-rating, right? Because in the end, you were a company that couldn't mine your resource, and now you can. But once that's over, now comes the evaluation of the resources. We see that it's a project that, since its minerals are such low grade, it's not economical if, for example, you can't build the plant nearby and process it there. The local opposition, which it's true, maybe they can't actually ban it, right? That in the end they send that to you, but just the fact that they can drag you into litigation for 10 years, of course, delaying a project by 10 years or even 5 years is the death of the valuation or the stock in this case without being able to produce or generate anything, right? So does this mean that everything is going to go badly now and so on? No, it just means that the risks are different now, the scenario has changed, and the probability is no longer 90% in our favor or 95 like it was before, right? The valuation, well, obviously already reflects some of this. It has quadrupled in 3 months, and that's not for nothing. So that's why, as you know, Antonio, on the record, I said that you have to be cautious, especially with the price, the weighting, and how you manage this position, right? A stock, and it's true that it has a lot of potential, but with such high risk, it's not liquid, it's a junior, and so on. In my opinion, obviously, since everyone has their own risk profile, it should never represent a significant part of our portfolio, right? We shouldn't get blinded just by the potential. We all picture ourselves already on the yacht, right? That everything is going to work out and so on. But reality is probabilistic, and just to give an example, even if you're right about everything, imagine a Fukushima type event. It wipes you out, sends it to zero. And if this goes to zero and you have 80% of your portfolio in it, you're out of the game. If you have 4% in quotes, it doesn't really matter. Obviously, nobody wants to lose 4%, but you can recover from losing 4, not from losing 80, right? So portfolio management is important. I don't know, Antonio, what do you think about what we were discussing and everything?
Totally, absolutely. In the end, we're talking about the same concepts, just explained in different ways. You often mention a book, Thinking in Bets, Thinking in Probabilities, and in the end, it's about looking for symmetry. I've mentioned this many times, and now, as you rightly say, we're talking about a different scenario. At first, there was a scenario where the stock price would have that retrade because, well, because the ban was lifted. Just to explain for everyone, I mean the ban on uranium mining in Sweden, right? And now we're talking about something else. Now we're talking about whether the mine gets developed or if someone comes along and buys it. And that's already a different matter. Does it have potential? Yes, but the first milestone, let's call it that, our information allowed you to be asymmetric. Now, indeed, it can still be asymmetric. Yes, of course, exactly. Because someone might say, well, it's still asymmetric. You can only lose 100%, but you could gain much more. Exactly. But the problem is when you think you know things that the market isn't realizing and so on, and you end up taking on a position size that isn't appropriate. So, well, we've called for caution, prudence, and risk management, which I think has been quite useful. And well, in the end, it's a story we'll be keeping a close eye on from now on. Well, we've been. The other day we did the count, right? It was discussed on Discord. Antonio spoke. Let's send him a greeting. Just over 2 years ago, in August 2023, people already started talking about it. So, well, it's definitely a story to keep a close eye on. Albert, now moving on to the questions in the chat, they're asking us about coal.
We can do this. Yes, I like this one. Exactly, because I wanted to show something that I was actually looking at earlier on investing. If you think it's okay for me to share my screen.
Yes, here you go.
All right. So coal, okay? This is a textbook cyclical industry, and I wanted to share this with you all. I think you'll see it very, very clearly here, right? I've picked a company called Alpha Metallurgical Resources, which produces metallurgical coal. This is the coal that's used for steel production in the United States. It's a relatively high-cost producer, and not only is it relatively high cost, but it's also a material of pretty high quality. Okay, so those are two very important characteristics when it comes to evaluating the company, right? What kind of product does it produce, to know what benchmark to compare it to, etc. And then also, above all, at what price it produces it. That's very important in a commodity. So this is a company, now you'll see the chart, that before COVID, it was about to go bankrupt, okay? It was trading at $2, $3. Prices had tanked, they had collapsed, and the company's debt, its balance sheet, basically meant it was going to go bankrupt. 3 years later, right? A little over 3 years later, it was trading at $400. Okay, 200 times higher. So someone sees this and might think, hey, what happened here? Or how do I analyze this cycle? And what can it tell us, obviously, about what's coming next, right? So I've brought you these quarterly results where you can see how operating leverage works, right? Prices started to bounce back in 2020, and as we said, this company was almost bankrupt. We can see it, for example, in the revenue, right? How they had dropped by 36%, then bounced back a bit at the end of the year and started to rise. But revenue went from 300 million to 1.3 billion in 2022. That is, it has quadrupled. We said that the company has multiplied by 200, right? Why does this happen? Well, these companies have fixed costs up to a certain point. What do I mean by that? Well, no matter how much you try to reduce operations, etc., you have some minimum maintenance costs, both in investment and personnel, extraction, energy, and so on, that you just can't get rid of. So when you make 335 million and spend 310, you earn 25 million in gross profit. We'll talk about cash flow later, no worries. When you make 1,300,000,000, even though your costs go up, because obviously there are parts like royalties, taxes, shipping, etc., that can be associated, notice that your revenue has multiplied by 4, but your costs have only doubled. So you go from earning 25 million to earning 709 million, right? So this is what's known as operating leverage. It means that any price increase above a certain threshold, almost all of it goes straight to your bottom line, right? This is the income statement, but if we look, for example, at cash flow, hold on, I still have this saved here. Net free cash flow, we can see here how it goes from being negative, basically not being able to do anything, to 400 million, 500 million, 600 million in the best quarters. This is the current quarter, -2, -4, meaning the ones we're looking at now, right? So this is operating leverage. Why did I also bring you these charts? I wanted to explain to you, look at where we are now, okay? If you look at the most recent quarters, again, they're not generating cash. In the research, actually, Antonio, if you remember, we shared a chart of the main producers of coal, of coke, also thermal coal, but especially metallurgical in the currently how many are making money and what margin they have. And the truth is that almost no one is making money. So when in an industry almost no one is making money, especially in commodities, it tends to be a turning point, right? Because it can't be sustained indefinitely, especially if the balance sheets aren't very healthy. In this case, many actually are, but in others, not so much. But when no one has an economic incentive to produce, what you're really doing is affecting the future supply. So the fact that demand is gradually, slowly increasing, right? In the end, if we assume economic progress on a global scale, then the demand for steel will slowly come back, and so on. So if supply hasn't responded, we'll reach a new situation of imbalance, and that's when we really see the explosive part of the cycle. So Jose Enrique asks us about coal. Thank you. Well, obviously, I can't know when we're going to see a recovery, and I don't think we're going to see the same thing we saw in 2022, sorry, but I do think we're going to see a good recovery in this case. Also, Antonio, if you look at the options or the brands, you'll see that these are companies with relatively interesting volatility, especially at the peaks of the cycle, both in times of pessimism and optimism. If you want to share it.
Yes. Let's see. Look, I'm going to share. You know, I usually don't, or I haven't traded. Hold on. I need to close this one and share this other one. I was looking at iron, which a user just mentioned to us right now. Do you want to put yours here? Which options trade are you doing?
The AMR one, for example.
It's trading at 144. Switch to put. Sell put. What's the price? Look at that. 140. Hey, that's not bad at all, huh? The thing is, you really need to have some serious capital there. Let's take one off. But the payout isn't bad. No, not at all.
And that's even though volatility has dropped these past months from the peak. But for example, with us, you know that one of the strategies we follow on Discord is options trading, right? Things that interest us, and it can be lucrative, pretty interesting to take advantage of volatility. This year, STS has clearly been the winner. Last year, it was Coinbase, if you remember. And the year before that, it was AMR, so there are always opportunities. And I love a saying that goes, there's always a bull market somewhere, right? There's always a bull market somewhere. So our goal and our duty in this sense is to take advantage of it and try to find it every time, of course.
Fantastic. Well, hey, I'll also take this opportunity to mention that with Investing Pro, you have a discount code in the video description, which I'm also sharing with you using the code LWS. Here you have a QR code in case anyone wants to use it, okay? I'm sharing it with you right now. Whatever price Investing Pro has at the moment, right now there's a 40% discount, and you get an additional 15% off. I'll remove this comment that's on top so you can see it. But basically, just use the link in the video description or the QR code, enter the code LWS, and you'll get an extra 15% off the best price. Right now, you'd be getting a 55% discount. It's a platform that some of you ask us about. Honestly, it's useful. It aggregates data, you can see projections, and it has AI features. Honestly, as you can imagine, we get a lot of collaboration offers and so on, and we only work with truly top global companies, and investing is definitely one of them. So here's the code for you. Albert, which one do you want to answer now? We have a lot in the portfolio that people are asking us about. Someone is asking about MicroStrategy. Look, I like this one, huh? Let's see. This one from 𝗙𝗢𝗟𝗟𝗡𝗓𝗓. I think it's Gonzalez, Gons. Which cyclical sector do you think is the easiest to start studying?
Well, it's not an easy task, let's say, to pick just one specific sector or area. But in a general sense, I think the most straightforward and manageable ones are indeed the shipping sectors. It's certainly true that we typically focus our attention on raw materials, but the entire shipping side of things seems considerably simpler and more straightforward to me, and I will thoroughly explain precisely why this is the case. In the case of ships, the entire global fleet is mapped in real time, right? That is, if you know how many ships there are operating and on which routes they're doing so, right? Because they obviously have reporting obligations. There are systems like AIS and so on that can identify them and websites that track all this. You also know about new orders that are coming in, meaning how supply is going to increase. And you also have real-time price data. For example, in our case, the research monitors, you know that every week we have let's say, the evolution of all the data, right? So it's a sector that, for me, is very straightforward for that reason, because it's easy to understand where the demand hotspots are, and you have all the data in real time. For example, if you switch to oil or focus on oil, there's a problem, which is that there are countries that don't actually report all their data. Inventories aren't that clear either, production, and well, there are too many companies operating. A lot of them are private and so on, right? So it's not that easy to monitor. So if you want to start somewhere, Javier, I'd say the simplest thing is to start with maritime transport. For example, you can start with tankers, with dry cargo, with dry bulk, and so on. And I think that's simple. I don't know. Antonio, what do you think?
Yeah, whenever we talk about the shipping sector, I find it hard to say because it might seem like I'm undervaluing the sector when I say it's relatively easy. And I always put that in quotes. And I say it a lot, relatively. But it's true that this is one of the big advantages of cyclical sectors that there's a part, which is the supply, that you already know. And that, whether you like it or not, takes some variables off the table. Because in the end, one of the key variables for any company is projecting future revenue. So I always say, for example, hey, in 5 years it's going to be, right? What is Netflix going to sell and at what price? Or what is Amazon going to sell and at what price? On the other hand, with cyclical sectors, you can have a certain level of certainty about what the supply will be like, how many ships are out at sea, how many are being built, because with a ship, from the moment it's ordered until it sets sail, first you know it's being ordered, you know the numbers being ordered, that they're in the shipyard getting ready, and then when they're going to set sail, right? So I totally agree that if I had to start studying a sector from scratch to learn how cyclical sectors work, each with its own idiosyncrasies, shipping could be a very serious candidate. Hey, they keep asking us, Albert, hey, which one do you want to select? Pernod Ricard, IREM, IND.
I don't care you. Share those you want and let's.
Okay. Look, Joan Antonio Forcadell was asking us about UPS, the company United Postal Service. You guys brought it up here about a year ago. Yes, that's true. We talked about it. And it's dropped a ton since then. Well, I think it was mentioned. Yes, Noelle brought it up. Noelle was the one who came to talk about the thesis and explained it to the followers of Lobo's The Wall Street, but I don't really follow it. I mean, I know the company, obviously NMM, because it's like saying I don't know Amazon, right? But I don't know, Albert, if you know a bit about the drivers that led to that drop.
Well, there have been several things. I don't really follow it either, obviously, not like 𝗙𝗢𝗟𝗟𝗢𝗪. In fact, I think she shared it at the summit, right? It could also be that there was something about the thesis. But anyway, in any case, several things have affected it, and one of them is the loss of some clients. And by clients, I mean they had distribution agreements, for example, with Amazon and so on, right? So obviously, well, that's a big blow. And then above all, the increase in costs, right? Labor costs. You also remember that they signed an agreement where they raised the salaries of many of their drivers or employees by almost 45–50%, and that had a big impact on them. I obviously don't follow it in detail like 𝗙𝗟𝗟𝗟𝗪𝗓 does, so I can't tell you what the ultimate driver is, what exactly happened, and so on, but those two factors have definitely worked against them.
Mauricio is asking us.
We're already seeing this in San Antonio with what we were saying about revolutions, right? Package delivery by drones, automation of these services, and so on. So it becomes even more of a commodity, more than it already was, right? In this case, well, the UPS business combined with rising costs is just a bad combination.
Yes, look, Mauricio Grow, who's an old friend, says, "Thanks, I joined late." Because he was asking us specifically about Nvidia's results. Diego Martinez is asking us, Metaplanet. I've been hearing about this one a lot lately, but it's not really on my radar. They say it's the MicroStrategy of Japan, basically, which in the end is just the company that holds Bitcoin, right?
Yes, exactly. They follow the same treasury strategy, which has also worked for MicroStrategy and Saylor. The thing with these companies is that it's hard to be a copy. Why is that? Because the special thing about MicroStrategy is precisely that it can arbitrage the premium over NAV at which it trades compared to the underlying asset it buys, right? To make it easy to understand, in case someone doesn't know what this business model is, imagine I have $10 in cash, okay? My company only has $10 in cash, or in this case, in Bitcoin, it doesn't matter. I should be trading at $10, right? If I don't have any debt or anything, that's my asset value. And in fact, probably with a small discount, simply because it's not the same to have it yourself as to have it in the company, right? There could be costs, liquidation, and so on, right? It's not that transparent. So just like holdings, it always trades at a certain discount. The opposite can happen, which is what happens to MicroStrategy, where you have $10 of asset value and you're trading at 20. In that case, what's interesting? Well, there's a very simple arbitrage, which basically consists of issuing shares. You issue them at 20, and with those $20, you buy $20 more of the underlying asset. So now you have 30 in assets, and if the market keeps valuing you the same way, which is at twice your assets, you trade at 60. So you're basically arbitraging the fact that they're giving you money for free beyond what you're actually generating, right? So in MicroStrategy's business, or the strategy they followed, it was very simple. That is, they have a software business that's really bad. It shrinks every year and is basically worthless, but it allowed them to pay the initial interest on a debt they used to buy Bitcoin. And once they had that Bitcoin, well, it traded higher, the market liked it, and they issued more shares, convertibles, and so on, even at 0%. Why am I explaining all this? To say that Metaplanet or other imitators, in Metaplanet's case, because of its size and attention, can do the same thing, but many of them have no reason to trade at any NAV multiple. And in that case, it's a business that wouldn't make sense or wouldn't be that interesting for someone who wants to speculate on this in the stock market, right? If what you like is Bitcoin, you can just buy Bitcoin, or you can buy derivatives based on the price of Bitcoin and so on. But buying Metaplanet or MicroStrategy is really betting that this situation of trading at multiples above NAV will continue. In the case of MicroStrategy, I can see it more clearly. In the end, there's always a winner, right? A leader who, because of their size, reputation, and so on, manages to scale like that. Metaplanet is doing well and is also one of the early adopters, but for others, just to expand on this a bit, well, it doesn't necessarily have to be that way.
For me, the appeal of MicroStrategy is that you're putting yourself in the hands of one of the people who knows the Bitcoin universe best in the world, which is Michael Saylor. And I think, hey, he'll know when to buy more Bitcoin, when to issue debt, when to get more aggressive with Bitcoin, and when to be less so. For me, that's the real appeal. Look, here we can see MicroStrategy right here in Hotel Low Ruston. It's clear that they've included it in this portfolio as an asset, not for trading, but to hold for the long term. Notice how it's been growing, because really, as Albert said, if you look at the company's revenues, they're pretty lousy, more and more so. Look at this, Albert, it's a classic. Petrobras, the Brazilian oil company.
In the case of Petrobras, we depend on oil prices. For me, it's the best major out there because their volumes keep growing, they distribute all free cash flow, they're in a region with high exploration potential, and they're vertically integrated. That is, they have upstream oil and gas production, midstream refining, and downstream selling to the end customer. So, well, it's a company that, because of political issues, country risk, and so on, it's hard for it to trade at what it's really worth or what it should be worth compared to peers like Chevron, Exxon, and so on, which are similar but don't have those issues. Still, it's going to pay us a lot of cash, even in times, like you mentioned here, Antonio, when oil prices are depressed. It still yields a 12 or 13% dividend without any problem. It basically has no debt, and so on. And it gives you optionality if you obviously believe in the oil cycle. If not, don't even look at this. But if it really bounces back, then dividends could be 30 to 40% of its market cap. So, well, I love it, but you have to know that you're taking on a latent country risk, and that's why it trades so cheap and won't trade higher, let's say.
You were pointing out a question there, right, Albert? Yes, but
I wanted to bring this up for two reasons. Look, let me wait for Antonio to project something.
oh, sorry, I'll take it off for you. No, I'll.
Put it on for you. Yes, hold on. Look, you were asking us. Trump acquires 10% of Intel. It seems the next step is rare earths in the race against China. These could be the tickers, and here is where the possible support for these companies might start to play out. Well, first of all, this is a bit of a deterioration in governance in the United States, because when you see the states starting to take positions in companies, it changes the rules of the game. Up until now, in some cases, like we saw with MPM, material, and so on, it can be positive, it makes more sense. In others, like Intel, it seems they gave them a loan that was later converted into equity whenever they wanted. The 10% of the company that they've kept, you know it's a company that's really been hit hard. In fact, I wanted to show you another feature that I use and that I think could be useful for you on Investing Prom, which is this one right here. On the screen, you have something called Pro Report or Pro Research for these companies. So if you want to start looking into a company, besides asking AI, starting to research, and so on, a simple way to begin is with this Pro Research feature they offer. You just click on it and it gives you an overview of the company, showing the evolution of both earnings per share and revenue. Here we already start to see some things that might have happened, a continuous drop in revenue and, above all, a decline in profits. It gives us a brief executive summary, what the company does, how its financials have evolved, the ratings it has received, how its revenue is doing, its costs, margins, debt, cash flow, and so on. So, things that could be going well or things that could be going badly. In this case, what is it about Intel that I find interesting? It's a company that used to have a 90 or 95% market share in data centers, but first AMD and then also partly Nvidia have completely eaten their lunch, and their share has dropped from 90% to 10 or 15%. So now they're facing a lot of problems due to negative operating leverage. And on top of that, they tried to get into the business of creating foundries, etc., to be able to compete with TSMC and benefit a bit, let's say, from this resource nationalism, which is what I wanted to highlight and bring up here for you. So, for me, it doesn't make sense to try to answer 𝗙𝗘𝗟𝗓𝗓𝗪's question, to try to guess where the flows are going to go now, which companies will be targeted next, because it's purely speculative in the bad sense to say, hey, where is Trump going to set the trap for interest? Is this going to be good for us? Is it not going to be, etc.? And we're really playing a game that's not based on fundamentals, because in the case of Intel, for example, it's a company that's not very interesting due to its competitive position, at least for me. Obviously everyone has to look at things for themselves. Here we can see what threats it faces, etc., and it's not able to capitalize as a semiconductor company during probably the biggest semiconductor boom in its history. So just speculating that Trump might now make us an offer or buy a company, etc., isn't really what motivates me the most, let's say.
Yes, I agree with you there. It's not a stock I'm passionate about. Naylor Penton, why do we think STS could reach $300 or $400 if its clients barely trade at $60 at most? For example, AT&T, Verizon. Look, regardless of all that, if you told me about the competitors, Naylor, maybe, and well, that's a whole other story. There's a lot to unpack there about multiples and so on. But when it comes to the clients, I just don't see a possible comparison there.
No, I think there's some confusion here because, Naylor, you have to remember that the price at which a stock trades doesn't tell us anything about the company's real market value. You have to look at the share price and the number of shares. For example, if I have one share and it trades at $100, I'm worth $100. But if Antonio has 10 shares and each is worth $20, he's worth $200. His unit price is lower. You've confused the unit price of a share with the company's market capitalization.
Yes, here you have it. In fact, on ASDS, I'm sure it's somewhere here. At some point, the market cap in the overview has to be here. Here it is, 12 billion, okay? That's what Albert was explaining. If we go to,
Look it up if you want. They just bought an asset right now, actually a network spectrum, for 23 billion, so
207 billion, but they're not really comparable because they're clients. Well, since we have the STS here, hey, tell us what you're seeing? Waiting for news.
yes, they've already sent some rockets for the next launch, which seem to be delayed. They're still signing agreements, so there's really no problem, but it has definitely lost some momentum. In the end, these kinds of speculative companies are a bit like the same case as DMX in this sense. Now you'll understand what I mean. If you don't have revenue, or just the bare minimum, and you're not generating profits, the only thing that can move your stock price is the possibility of generating them in the future. That is, news that brings you closer, either in time or in scale, to generating significant profits in the future. So, in this case, since there have been delays and part of that momentum has been lost, we're now in a period known as a news drought. That's what explains the current weakness we're seeing, which for me isn't a problem at all, but it's just important to know what we're invested in and to see that the thesis is actually developing well. We have to pay close attention to see if what we expected to happen, like the signing of new agreements, the deployment of satellites, the start of commercial activity, and so on, actually materializes. If that's the case, there won't be any problem. But if delays continue or there are operational problems with the launch, which can't be ruled out, then there's more downside, of course.
Roberto Perez says, hello, what do you think about QSO? The tailwinds from the drop in interest rates could be huge. This one's from Jacobs.
I don't know it. If you want to look it up here, check it out. Ask Warren, what do they do? Why?
All right, let's do it. I'm not sure if this is Jacobs, the investor. What did I say it was called? And QXO. So. This is a listed company financial beat. I think this is it. Or I'm confused. I'm sure they're telling us something in the chat, right? Yes, it says it's Jayco's. Exact. This is the one that Merritt has once commented on. Yes, the CEO is Brad Jacob. Exactly. This is CEO Montana. Yeah, well, Emerito Quintana speaks wonders of this CEO. He has a book that's in English about how to build wealth or something like that. It has a name like how to become a millionaire or something. I don't really know. And this is the CEO that Emerito Quintana talks about everywhere he goes. Because what he does is buy companies, turn them into top companies, and then sell them. And Emerito has mentioned it many times that he's an amazing CEO. What happens is that with this last company, I think Emerito has bought in and sold out because its value kept going up, and he always keeps it in his portfolio. Well, Roberto, that makes it even more impressive.
Given that for him, that's usually a good first step for validation, honestly.
Absolutely, absolutely. There are several questions about oil, and you haven't asked specifically about Petrobras. But look, Diego, Vitex is asking if we can talk about it, and also Juanjo. We actually discussed this today on Discord about the deposit that has supposedly been discovered in Antarctica. Well said about the supposedly.
I've always thought that just because a deposit is discovered doesn't mean it will collapse the underlying commodity market. First, you must assess if it's economically viable, legally feasible, if it can be extracted, how long that would take, what the costs would be, with what teams, and so on. Sometimes that kind of thing comes up, right? It's the typical news you hear when gold prices go up. They've discovered an asteroid with $1 trillion worth of gold, or whatever. And I say, sure, but you have to go there, mine it, bring it back. What about logistics and cost? Well, that's it. Usually, these stories pop up to create buzz or content, but you have to evaluate each case individually. And we were asked about Vitex, right? Also, Antonio.
Yes, Tex.
Well, look, Vitex has a problem, and that's that it's a company. Well, it's an oil producer in Canada, and its costs weren't as low as they claimed because they were only counting part of them. But as you know, costs have to be measured like in mining, right? All-in sustaining cost, meaning how much it costs you to extract, but also how much it costs to transport. So not just production, but maintenance, etc. And so it's a company that, since oil prices dropped in 2022, has suffered because they made an acquisition that really wasn't well understood, with not many synergies, and it wasn't clear what the rationale behind it was, etc. If the party had continued, obviously in 2022, well, it would have all been good times and that's it. But in the downturn of the cycle, it's not as resilient as others. Earlier we mentioned Petrobras. Well, Petrobras is printing money at any point in the cycle. It's true that obviously a 40% free cash flow yield isn't the same as 20%, but it's still interesting. And in Baytex's case, it got caught off guard with the acquisition, with costs a bit higher than expected, and it's not performing well. If you believe in a secular rebound in oil, then yes, but if not, it's in for a rough time.
Look, since we're talking about oil, let me share some information we have at WWSS Financial Research. A lot of times, as people say, I get the feeling that those of us who are in this world think everyone knows what we offer. But this is just part of what we do at Financial Research, which is data monitoring. You won't find this data on regular platforms and such. Well, if you pay 40,000 euros for Bloomberg or something like that, maybe you will, right? But take a look at the data we provide here. As Albert mentioned, today's topic is production. Here we have it broken down by year. And if you go through the data, it even lets you make comparisons and see how things are right now. The RS, the Brent contracts, refining margin, and of course, always the futures curve for both Brent and WTI. This helps us understand if the market is in contango or backwardation, which can give us an idea for investing. I wanted to bring this up because sometimes I think we're not able to convey just how powerful this data really is. Earlier, a viewer said, "Hey, I want to learn how to study a cyclical sector like shipping." Well, look, the data is truly amazing, and only professionals usually have access to this kind of information. And that's exactly what we're trying to do here: democratize investing. It's taking me a bit because I'm the one sharing my screen. But look, here you can see how things are going. Well, in this case, the clean tankers by year, the bar dry index. Do you want me to comment on any specific one? Alvu.
I don't like them. Well, for me, obviously it's the tanker one, yes, but also the one for bulk carriers, etc. What is this useful for? Well, really, it's so we can perfectly model the profits, because as we've already said, the ships that are in the water, the ships that are going to be built, are public information, and the best indicator of demand or how it matches up with supply is the prices they can charge. So this information is necessary.
Of course, in the end, you make a model and say, this company has this many ships, this many contracts. How do I build the model? What part am I missing? The revenue, whether it's from the ship, the contracts they've signed, and if I have the freight rates, then I already have quite a lot. Well, that's something to keep in mind for those of you who ask us about it. 𝗙𝗘𝗟𝗟𝗢𝗪, this is also something we're following closely. Crypto cycle. Right now, at least recently, Ethereum has been the darling when it comes to money flowing in, and it's true. What's going on with Ethereum? Is liquidity moving from Bitcoin to others?
Yes, look, if you've studied the previous cycles we've had, and I'm talking about 2017, 2020, 2021, and so on, the pattern they usually followed was very similar. First, Bitcoin goes up, then the liquidity from Bitcoin spreads to the main market leaders. In this case, it could be Ethereum, and in the past it was also Ethereum and, for example, Cardano, Solana, etc., the market leaders. After that, the rest of the altcoins further down usually benefit as the wealth or profits created cascade from the top down. This time it's a little different. Why? Because the money hasn't come from retail investors, but rather from institutions and adoption. As you mentioned with the ETFs, we can also see it with companies holding Bitcoin in their treasuries and so on. So that changes the rules. Why? Because there won't be any rotation there. That is, a company that buys Bitcoin or Ethereum isn't going to buy a meme coin. They're not interested in that at all, and there's no reason for it to go up. Does this mean it won't happen? No, we can't know. More speculative money might come in later, but it's a different cycle. Two assets are kings, Bitcoin and Ethereum. We'll see if Solana joins them, as it has interesting properties.
Solana is also making a strong move.
Yes, because it has properties very similar to Ethereum. We'll see in a moment which ones, as they could be interesting for a lot of people. And here, the thing is that, first of all, Bitcoin, as you know, is a treasury asset whose purpose or reason for being is simple. Basically, when we look at currency valuation and so on, this is a real, finite, desirable asset. We already know its properties, so it makes sense to allocate part of your treasury to it. But it has a problem, which is that it's like gold. It doesn't yield anything. So, if you had treasury bonds, they yield 5%, 6%, or 4%, whatever it may be. And if you have Bitcoin, it doesn't yield anything, right? But if you have Ethereum, it does, because you can do staking, and so the yield from that actually gives you returns. And not only that, but you can also, as you know, program, create smart contracts, use it in certain types of transactions like these, etc. So it has some properties that make it interesting beyond just speculation, of course. So is it an asset that makes sense to attract institutional interest? Its small size compared to Bitcoin means that inflows, even if they're much smaller or similar in comparison, they could go up much more, plus it was already lagging behind. Let's remember that it hadn't even surpassed the previous cycle's highs until this week. So, how do I see it? Well, I think obviously Bitcoin makes a lot of sense, as you know I've always said, and that Ethereum also has a high probability of making sense in this cycle, and that's how I see it. But for the rest of the altcoins, I don't see it as clearly, for the reasons I mentioned, because the source of demand is different this time.
Solana too.
Solana is the same as Ethereum, but improved in terms of its properties. That is, it can give you yield, and not only can it give you yield, but it's also much faster and more efficient for any type of transaction. What's the problem? There are still a lot of insiders. In other words, the tokenomics, meaning how the entire supply of Solana has been distributed, is much worse than Ethereum's, just so we're clear.
Hey, just so you know, Albert is a well of wisdom and also knows a lot about crypto. In the research, those of you who are members know that we've even played around with stocks, Bitcoin stuff, Ethereum stuff, ETFs, and options. Well, I missed all the Ethereum ones myself. You can't be everywhere. That's just how it is. But if I see any opportunities, Albert will let you know. Look, this question from Pablo Jose Seguim is about a sector you've also talked about here, even in the Q and AMP. A sessions you're looking into, right? Travel, Pernod Ricard, beverage sector.
Yes, this is a sector that's undergoing a major transformation, and it's facing a lot of challenges all at once. The first thing is that consumers are really weak right now. If you look at consumption of any kind, obviously food, but for example Pepsi, Coca-Cola, fast food companies, Nike, etc., any kind of consumer spending, even the defensive sectors, are struggling a lot. So, of course, alcohol falls into that category as well. That's the first point. The second is that per capita alcohol consumption is declining. This has been a trend for years. So, many of these companies that used to be able to grow through volume are now shifting to a premiumization strategy. In other words, they're selling a bit less, but what they're doing is selling higher value-added or more expensive products, and that way they can maintain margins and so on. That has an advantage, which is that you'll have higher margins and so on, and a disadvantage, which is that these premium brands, besides having lower volume, usually take more years in the working capital cycle. What do I mean by this? Well, if you produce a wine or a liquor today and sell it tomorrow, it's quick. But if you have to keep it in a barrel or aging for 10 years, then it takes 10 years to monetize that. So the cycle is longer, and until it adapts or gets rolling, they'll struggle with cash generation. And then, valuations were too optimistic, so everything has come together to make them suffer. In the case of Diageo, obviously the quality is undeniable. For me, the debt is a bit too much. I'd like to see them reduce it more before I can say whether it's really that interesting or not. Even so, I think things have been exaggerated because they're in a low point of the economic cycle, especially on the consumption side, and they're being punished too harshly. But the debt is the only thing I don't like. And Pernod Ricard is pretty much the same, but with a weaker brand and lower margins. So, those two are the best for that reason, but I'm not really a fan of Grand Marnier or anything like that.
Sorry, Roll says. Oh, excuse me. Speaking of alcoholic beverages, do you know TFF, the French company from the Laria region?
Yeah, I think it's this one, 𝗙𝗢𝗟𝗟𝗡 or something. They make the barrels. Honestly, I've never really looked into it. I mean, I know about it, but not in depth, nothing. I think Carlos Santos actually had it in his fund.
There are still a lot of questions. Look, this one is interesting. Let's see. Sir, excuse me. The tin sector, TF Metal X is asking you, and your opinion on the price of tin. Hey, tin was in the news, especially with that company. Oh man, I just blanked out now. Which one was it?
Alphamine.
Yeah, that's it. Alphamine. Man, how do you forget the names of these companies? What do you think? How do you see the tin sector right now?
Well, look, it's very interesting because right now the semiconductor segment is definitely driving demand, but the more traditional side, appliances, soldering for other types of electronics, and so on, is in a slump, just like consumption, which is cyclical. But the supply side is even worse. So we have tin at $35,000, which is a lot. It's actually doing really well in this demand valley. So I think there's still a lot of room for growth here. In the case of Metalex, they've taken a really interesting approach by buying stakes in any other promising and viable tin project, basically turning themselves into a kind of tin ETF. Those stakes themselves have more than doubled in value. In other words, it's not money wasted. Beyond the strategic sense, the economic logic is clear. The problem is that they're not doing a lot of buybacks right now, but still, they're basically printing money. In fact, in their latest financial statements, there's a bit of a trick. They set aside 28 million in reserves to buy the remaining stake they don't yet own in Renison, the asset they operate, from a Chinese company. So that amount is deducted from the cash flow, but it's not actually real. And then there's a catalyst. In March, shares of that Chinese company will stop trading. The stock was delisted due to accounting irregularities, governance issues, and so on. In other words, it's a mess and will stop trading. So if it isn't sold before then, the shareholders who are still in will be left with nothing. So there's a lot of pressure from all the shareholders for this to finally get unstuck and for them to sell the shares to Metalex, because Metalex doesn't care about paying for this, since what they really want is to keep the asset, of which they only own half. So they can pay a price for those shares regardless of what the company has done, because the only thing they're interested in is this asset. So I think that from now until March, there's a potential catalyst, which is that.
Albert, I'm going to share my screen with you for a question we're being asked, which is from Carlos Camara. Good afternoon, Albert. Aren't you worried about Wendy's high level of debt? I include it. I show it precisely on the balance sheet.
Yes, great, Antonio. Well, not really, because they're not worried about it. And what do I mean by that? It's intentional. You know that debt is simply another, tool, just so we're clear, in a company's arsenal, right? So, as long as it's more or less under control, the company can aim to maximize its returns, invested capital, ROEs, and so on. In the equity, sorry, not in the ROIC, by having a more or less reasonable and interesting level of debt, right? So, Antonio, here you're showing the debt, right? The long-term debt. We can see, for example, it goes to 2.6 billion, last year it was 2.7, and so on. And I'd ask you, if you can, where it says balance sheet, to switch to the cash flow. All right, so if you scroll down, you'll see that this generates, or is generating, let's say, a cash flow of about 300 million, right? So someone might think, hey, this is a reasonably high level of debt. You have to keep in mind that here, in this sense, it's like the REITs, right? I mean, they're carrying out part of the business expansion that's now consuming more capital or more debt. They're going that route than what would normally be required. But if they decided to cut this back, then they could be paying off a bit more than 300 million per year, right? Because within this growth capital, new openings are also included. So not all of it is sustaining capex, let's say, but part of it is for growth. It's relatively high, but I'm not worried because the company aims for it to be this way. If it were something unintentional, out of control, then I'd be more concerned, but it's reasonable given the circumstances. In fact, if you go to McDonald's and Tokyo,
Let's go.
NCD will show up. NCD. All right, look, here.
Do you want to see the debt?
Yes, but here, for example, look, if you scroll down a bit to free cash flow first.
Leverage free cash flow.
Yes, 6 billion, right? Or 6.6, for example. All right, and now if you go to the debt. Well, we see 38 billion, right? So that would be about 6 times a bit more than that. It's true that it's less, huh? Than Wendy's part, but you can see these are still pretty high levels. It's not because of the type of business or expansion they have, because nobody would expect. If someone told you how much debt McDonald's has, I don't think you would have guessed, Antonio, 6 or 7 times free cash flow and 38 billion, right? So, and you can see it's stable too, meaning they could pay it off, of course, but look at how it's evolved, right? In the end, companies often aim for this. We also saw it with Lowe's, which did it to buy back shares, etc. So I'm not worried just because of that.
Well, let me mention 3 things, okay? First, we're getting to the end, so we'll answer a few more questions. As you know, sorry, it's impossible to answer everything because people are enjoying the format, but you can leave your questions in the comments. Second, you're asking us specifically, hey, what do you think about Alibaba? Well, let me give you a scoop. This Sunday on Sanhedrin, Gabriel Castro will be joining us exclusively to share his thoughts on Alibaba's results. So I think there's no better person than him to talk about it. And third, we have almost 400 people watching live, and it's still August. Thank you all so much. And you already know that those likes really help our channel grow. So please subscribe on YouTube, hit like on Twitter, on Ivo, wherever you're watching or listening to us. Albert, look, I'd like to. We're wrapping up, but Paulo Jose Seguin has picked up the baton. How important is contango or backwardation when it comes to predicting the price of a future?
Well, look, when it comes to predicting the price of a future, it doesn't matter at all, okay? Because futures are not a prediction of the price. That is, when sometimes we look at the futures curve and it seems to tell us, okay, so this is what analysts expect the future price to be. That's not it, okay? So it's not useful for predicting. What is it useful for? For understanding where we are right now, okay? So what's important here? It's what we always say, right? The shape of the curve and the changes in the shape of the curve. A curve can be in contango or in backwardation, as you said. Contango is what we would normally expect. It simply means that the current price is lower than the future price. Why is that what we would expect? We would expect it because, of course, money is worth more in the future, right? I mean, the value of money over time has to be discounted, and also because storing these raw materials for a period of time, if I produce it today, storing it for a year has a cost. So it would make sense for the price to be higher in the future. When that happens, what it tells us is that the market isn't in a rush to bring supply right now, and depending on how pronounced this contango is, it can give us information about how things are changing and how supply is adapting, right? Whether the balance is tighter or looser. And backwardation is the complete opposite. The current price is higher, which is what we see here in Brent. What this is telling us is that, in reality, the market is indeed somewhat, at least a little, under pressure. You have to look at the magnitude, which you get by subtracting the next month's price from the current month's price, okay? That's what's known as the time spread, right? And what that tells us is that the market is tight. So it says, hey, I'll pay you a premium if you give it to me today instead of a year from now. Right? That's what's unusual, and it gives us a sense. So what's interesting here is to look at both the shape of the curve and how it changes over time. So, well, it's not a pretty prediction, but it does explain things to you.
Albert, we're going to start wrapping up, as we said, but this question also seems interesting to me. I had it here somewhere. Ta 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 ta. Oh, I missed it. Sorry about that. Look, yes. It's the one we talked about the other day, about a sector that's getting interesting, petrochemicals, Josue. Good afternoon. How does the Fed's interest rate cut and the announcement of anti-dumping measures in Brazil affect Braskem?
Well, the Fed's rate cut affects Braskem very little, honestly, because Braskem's debt generally doesn't depend on these interest rates. Obviously, having looser conditions globally is positive for demand. So, in that sense, yes, but not the rates themselves. And then the anti-dumping announcement isn't that relevant because it's not against China. That is, the real issue is that the main overcapacity is in China, and that's where the real problem lies. And in this case, they've imposed it in Europe and the United States. Obviously, it protects the market, which is positive for Braskem, but it's not as important as if it were against China. Here, what also comes into play are the geopolitical alliances, right? You know that Brazil and China have much closer ties, certainly more than with the United States, with whom there's currently a dispute. And so, well, this is one of the things that's reflected here.
All right, Albert, we've reached the end of the stock market Q and AMP, a session. Also, for those of you who are reserve members, there will be a Q and AMP, a session with you as well, right? We'll be announcing the dates soon for the monthly Q and AMP, a session, so you can sign up and we can take a look at the companies we're following within Finance Reserve, the model portfolio, new ideas, which Albert is always preparing and sharing what he's looking at, and so on. We'll have it soon, right?
Yes, that's right. And, well, for any questions that didn't get answered today, don't worry, we'll be back next week. So, there's now.
That's what I was going to say. Next week, you already know, mark this date. Every Thursday at 8, we'll have our stock market Q and AMP, a session. Make a note of it. I know I don't even need to remind you anymore that 8 o'clock is Sanhedrin time. So thank you very much for joining us. Remember what we talked about today. Every Thursday, we have our stock market Q and AMP, a session. I'll share that exclusive discount again for all of you who ask us later about investing, which is the platform we use. You already know that whatever the best price investing gives you, if you add the code LWS, you get an extra 15% off. Nothing to sneeze at. There's the QR code, and you have it in the video description too. And as I said, this Sunday Gabriel Castro will be joining us on Sanhedrin. So thank you all very much, and have a great weekend. Bye.
See you next time.